When we hit the middle of the market in 2022, our market drastically changed from what we had been seeing for the previous 2 years. Interest rates were rising quickly, inventory was rising quickly, and buyers were leaving the market. We went from a 4.9% interest rate in August to 7% in October, which was the fastest that interest rates have risen since the 1980s. This put the brakes on the entire market. The level of uncertainty made buyers just uncomfortable. And honestly, I don't blame them. Since then, our market has been inching along. We've seen new construction hurting with a massive number of cancellations. And all areas of the market have seen price decreases as well as increased seller concessions. And by December, most people felt like 2023 was just gonna be one of those slow and sluggish years because December was one of the slowest months that we've seen in a really long time, with very few homes going under contract. Now, we know that our season really begins in January. That's when it normally heats up. But after what we saw in the second half of 2022, what was it really gonna look like? Would we see our demand come back at all? And what about our supply? It's normal to see our supply increase during this time of the year because our demand also increases. But if we don't get that demand, does that just mean that our inventory is just gonna continue increasing? And what about those interest rates? Where are they headed? Let's take a look at all of these and see what's really been happening since the beginning of the year. First, let's start with interest rates because that's really where it all starts. Currently, rates are at their lowest level since September of last year, and it's really boosting home buyer demand as well as home builder sentiment. The declining rates we have seen since November has really given home buyers that confidence to get back in the market. Now, we did see rates tick up just a little bit in December, but they stayed below 6.5%, which made buyers feel better about buying. And since then, rates have come down to 6.1%. Now, no one really knows if they're gonna stay here, bounce around a little bit, go up, or go down. Personally, I think we're gonna see these rates bounce around in this range for a little while. But these lower interest rates and lower home prices together have made homes much more affordable for people. So what do you think the interest rates are gonna do? Do you think they're gonna stay here, go up, or go down, or bounce around like I said? Let me know in the comments down below. Now, because interest rates have come down, mortgage lenders have seen an increase in their mortgage applications. Now, this is an important thing to watch because this is a leading indicator to show what kind of demand that we could have in our market. And the number of applications has grown not just for purchase, but also for refinances. And both of these have increased by double digits beginning in January and grew again this week by 27.9% from the week before. Now, even with these increases, refinances are down 80% from where they were last year. And purchase activity is down by 35% from where it was last year. But it is a far cry from how low it was at the end of 2022. Now, you may be wondering who in the world is going to refinance their house right now at 6%. Well, if you think about those people that bought over the last 6 months, some of them could have been caught out just with bad timing and secured a loan for 7%. But to be able to refinance into a 6% mortgage and save 1%, that makes a significant difference on your monthly mortgage payment. And since the decrease in mortgage rates, Google searches for homes for sale are actually up by 30% from their November low, but they are still down by 26% from last year. Redfin Deputy Chief Economist Taylor Marr said this: "The people who started browsing homes online and scheduling home tours at the end of 2022 are now turning into actual home buyers. Low competition, falling mortgage rates, and seller concessions are bringing some buyers back to the market. That's helping keep national home prices aloft, which is one bright spot for sellers. But many buyers are still sitting on the sidelines, and demand could dip back down if inflation declines slower than expected or mortgage rates rise again." With mortgage rates declining and more buyers entering into the market, we now have to look at supply and demand. Okay, so I wanted to come in here and show you our active inventory. So this is going to be our supply portion. So as you can see, in May, this is when our inventory really started to climb. Then we saw it peak right here in October. But since this time, you can see that our inventory has actually started to decrease, and it's actually decreased by about 4,000 homes. And because of this, even though our market has softened, this is keeping prices from falling off a cliff. Now, this does not mean that we are not seeing price reductions, because we are. But for those homes that are in a great location, well-maintained, and well-priced, they are not sitting on the market long, and some are still getting multiple offers. Now, when I say multiple offers, they might get 2 or 3. We are not looking at 20 to 30. I can tell you, I showed a client of mine a home yesterday. It had 10 showings scheduled on it just yesterday, day 1 on the market. Today, it has another 10 plus showings scheduled for it. So my client likes this home, so I talk to the agent and I find out that they are expecting to receive one offer. I share this with my client. It did not deter him. He is actually thinking about making an offer as well. So I will be competing against at least one other offer on this home. So multiple offers are still happening. Just everything that I mentioned before needs to be in place. So again, I wanted to come in here and show you what our demand actually looks like. You can see from this chart, this is the end of December. We were less than 1,000 contracts accepted at that point. First week in January, we were a little over 1,000. Second week of January, we jumped up to over 1,500 homes. In fact, the second week of January has been the strongest week since mid-August. If this buyer trend continues, it will likely stop any more price declines. In fact, this buyer demand is already being seen in our average price per square foot for active listings, which has gone higher. This will eventually spread to listings under contract and closed listings. But this takes time to see because price is a lagging indicator. So if all these things happen, you would likely not see this until the second quarter of this year. So one of the other metrics that I watch is the contract ratio. Now, this is a faster moving metric because it is not seasonally adjusted. This looks at homes active on the market and homes that are under contract, and it can move rather drastically as supply and demand shifts, which is exactly what you see right here. So again, I've talked about this in other videos. Everyone wanted to say that we were falling off a cliff, and this looks pretty scary, to be honest. And then we just kind of started to glide right here, and we kind of hung out, and it was staying down. This again is December. We had really low sales in December, low inventory, low sales, low supply, low demand. And then our demand ticked up in January and we're at 37.2%. What we see is our active count right here at a little over 15,000, but our sales under contract jumped up, and that's what made our contract ratio on this chart go up. Now, when it comes to looking at where prices are headed, for this, we look at the Cromford Market Index. And the Cromford Market Index is seasonally adjusted, so it can move a little more slowly. And currently, it is sitting at 109.4. Remember, 110 means we're in a seller's market. So we are right on the cusp, still in a balanced market, about to head potentially into a seller's market again. Why? Because of what I just showed you in the contract ratio, showing that our inventory is decreasing and our demand is increasing. And that is a pretty good indicator that we will see the Cromford Market Index start to tip towards the sellers. So we just talked about what the overall Cromford Market Index is, and now I want to show you what the 17 largest cities look like individually with their individual Cromford Market Index. And it's quite green. So all of these cities currently are moving in a direction towards the seller's market. And as I said before, 110 is a seller's market. So right now we have nine cities that are in a seller's market. Just last week, we only had 7. And if you take a look at some of these percent changes, it's pretty significant. Paradise Valley had a 37% increase in their Cromford Market Index. Chandler, 47%. Chandler has been jumping exponentially over some of these other cities for a few weeks now. So as you can see, 17 of the largest cities in the Valley of the Sun, they are all moving in a positive direction towards the sellers. This does not mean, however, that we are going to end up right back in that frenzied market that we just came out of over the last 2 years. So please don't misunderstand what I'm saying. If we enter into a seller's market, I believe it is going to be a soft seller's market and could only last until summer. And then we could shift back into a buyer's market. This could be short-lived just while we are in our season. What do you think? Do you think we're gonna stay in a seller's market, or do you think we're gonna shift back into a buyer's market? And the whole reason that this is happening is because interest rates have come down, coupled with home prices coming down. The ability for buyers to negotiate on price, negotiate on terms, be able to use some of that money to buy down the rate and really make these homes affordable for them again. It was really the lack of affordability that drove buyers to call it quits. They had been scratching and clawing, trying to get a home, and when interest rates rose as well as home prices rose, it just priced them out of the market. But now, as I said, as interest rates have come down as well as home prices, this has allowed some of these buyers to get back into the market and put them in a position to have an affordable payment again. But with our demand increasing and our supply decreasing, this means there will be less downward pressure on pricing as a whole. And if inflation and mortgage rates continue to decline, the worst may be behind us. The wild card in all of this are mortgage rates. Because if those rise, all bets are off and everything changes. Now, if you like this video, take a look at this one. If I can answer any questions for you, please feel free to reach out. As always, I thank you for watching, and I'll see you next time.